Bare bone basics training. Tonight we're going to continue in the path of growth stocks. We're going to switch it up a little bit and try to get a little bit more into the mindset. Found some great examples that I think will kind of shift how we view and think about stocks, using some present examples, things that are actually happening right now, to try to see how we can become more effective and get the best out of our choices when we're actually investing in stocks. So this morning, the thought came across about surfers and how a surfer has to find that perfect wave. And it's very similar to stock investing. You have to find the wave and learn how to ride that wave if you want to make a profit off of the stocks that you invest in. So today's session, we're going to call it Riding the Waves of the Stock Market. We're going to actually try to think like a surfer and talk about some different types of waves. And more importantly, we're going to talk about the coronavirus and how that's affecting the stock market. This is a perfect example that we can talk about the herd and how things shift and how we can actually view and look at 3 different stocks that I have as examples that you guys should be very familiar with. I believe we have StarBucks, of course, my favorite Coca Cola, and I believe I have one more out there for you. So we'll take a look at those towards the end here. And we're going to keep this pretty brief tonight. We're going to try to. If you guys know me, I can talk about this stuff all night long. So we're going to try to keep it brief though. So in thinking like a surfer, the very first thing that came up, there were 3 key points in all of the research I did this morning about a surfer. And the very first one is a surfer knows the importance of balance. Every wave is different. A surfer has to continuously rebalance his or her position on a wave in order to keep riding it and get the most utilization over the short period of time. Experienced surfers find more speed and drive by knowing where to find the most power in a breaking wave. That's the same thing with stocks. You're going to have a portfolio. When I say portfolio, it's your collection of stocks that you've purchased, that you own. You're going to have to keep it balanced. And what I mean by balance is you're checking to make sure that you have the right mix. You have the right diversification of stocks. When I say diversification, we're talking about the fact that you're not investing everything you own in one stock. That's not a good move. Will it work? Possibly. Is it safe to do? Definitely not. Also making sure that you are investing across different markets. For example, if the real estate market took a huge hit today, my portfolio would be just fine because my stocks are in various markets and not just one. That's what we mean by diversification. But back to balance. So when you are building your portfolio, and this doesn't so much apply to dividend stocks as it does growth stocks, because the way you make money with growth stocks is actually buying at one price and selling at a higher price, of which the wave determines what your price, the price of that stock is going to be at any given time. It is a major factor in determining it. I'll put it that way. It's not the only one, but it's definitely a major factor, of which we'll kind of see that when we look at some charts tonight. So in balancing your portfolio, you're looking to make sure that you are in at the right time and getting out at the right time. Or rebalancing could be, okay, I'm going to take some of my profit now, leave some there as far as the number of shares I own. To give you a perfect example, Facebook. I bought them at $17 a share. They're now worth over $200, but I didn't keep them at $200. I started selling some. The first time I sold, I believe I sold some of my shares at the $80 or $90 range. I sold 25% of the total number of shares that I owned. Why? I wanted to pull some of the profit off. Not greedy. Greed gets people in trouble in the stock market game. So I pulled some, and then the second time I pulled is when Mark Zuckerberg, I think I said his name right, when Mark Zuckerberg actually had to sit before Congress. I did not want to spend a lot of time monitoring to see when Congress could possibly create some type of new rules or stipulations as far as social media was concerned, as far as how they manage and handle data. That's how they make their money. If there are any kind of new stipulations that were to come into play, it could affect Facebook's ability to make money. And at that point, that would definitely affect the price of the stock, and it could drop. That's definitely a key factor that could affect that company. I did not want to spend a lot of time waiting to see. I also personally did not like the whole data issue that was going on, because it was affecting not just social media, not just privacy issues, but it was also becoming a political factor. And because of that, I did not want to wait to see how far the stock would drop. And it did drop at that time, but it regained and built itself back up. So at that time, I took out a total of, I believe, about 50%. So at that time, a total 25 and 50%, 75% of what I originally bought, I sold. On both cases, I made a huge amount of money from them because, as I said, I bought them at $17. The first time I sold, it was between 80 and 90. And the second time I sold, they were at 125, 130-ish, somewhere like that. I still own 25% of my original purchase, and now they're at over $200 a share. Keep in mind, I bought them at 17. So either way, winning. There's no loss in that. I rebalance based off of my needs, not based off of what another investor's needs are, but mine. I don't believe in greed when it comes to investing in the stock market. That's what gets people in trouble. I also don't believe in fear when it comes to the stock market. That's another thing that gets people in trouble. Thus, thinking like a surfer, the importance of balancing. Next up is know what to chase and what to ignore. Oops, went past my slide a little too fast there. Know what to chase and know what to ignore. In surfing, this lingo, there are two basic types of what they call ocean swells, or what produces your waves, based off of the ground swells, based off of wind, all the concepts that actually help to produce waves. So from an investor's perspective, wind swells are similar to the market's short-term price swings, which we call volatility, and the fickleness of the up and downs or the dips that they take throughout the day or throughout the weeks. Knowing which one of those are good to jump in on and which ones to stay away from is important. So when a stock drops, that does not always mean jump out. It could mean jump in, because you're buying it at a lower price. It's at a better value due to shifts and changes of the current time. Wind swells. Certain activities that have occurred may cause a stock price to drop. And we're going to go through an example with the coronavirus, because that's happening right now, where stock prices have dropped, in some cases drastically, because of something that's happening in another country. Well, as a surfer, you need to know, well, as an investor, surfer of the stock market, that's what we're going to call it. As a surfer of the stock market, you need to know what wave do you chase and what to ignore. What dip in the prices of a stock is a good dip? Is it something that's temporal? Is it a temporary thing? Did it drop because, perfect example, BP. There was a oil spill and their price dropped drastically. Perfect time to jump in. That was a temporary thing. Now, if there was something that was happening that we believed was going to create a long-term effect, we're going to ignore that. And just like we're going to ignore my phone call, apologize about that. I'll call them back in just a second. And then last, we have diversity of tools if required. So as a surfer, there are many different places that an avid or a professional surfer will surf. They may go to different oceans, and with different oceans, they'll have to have a different board. It could be because of the wind of the day. They may have a 10-foot board that's solid versus having an 8-foot board. So things can kind of shift and change as far as what is the best tool to use. So they have a diversity of tools. You should as well. You should have a diversity in your portfolio and your diversity of thought process of identifying what makes a good stock and what doesn't. And what I mean by that is that we have a lot of analysts, financial analysts, that give their opinions. I cannot stress these are opinions. And you can find an opinion to fit any need you want when it comes to the stock market. I guarantee you, for any stock that's out there, I can find someone that says it's good to buy, and I can find someone that says sell, sell, sell. So with that, I like to have a diversity of knowledge that I pull. The knowledge is my tools that help me to make the decision to either buy or sell. Knowledge is the tools that I use to identify the finances of a company. So the finances are facts. Either they're making money or they're not, or somebody's lying. That has happened. But by having a list of tools that I'm comfortable with, as far as how I purchase, I use more than one platform simply because I have more than one portfolio. Each portfolio I have it set up specifically for a specific use. So my dividend stocks are in one portfolio and my growth stocks are in another, for the most part. And then I have some small ones that I use just for testing purposes, so that if I find someone that says, hey, well, what's a good broker to use, I can give them my good, bad, and ugly of all of the ones that I've played around with, and try to give them some good quality feedback. But having a diversity of tools is required if you want to be able to be very effective in the stock market. All right, so types of waves. The worry wave. Oh my. I think that's the one that we get the most. And what I mean by the worry wave is, you've heard me call it the herd. The herd are groups of people that swing based on either emotions or the information of the day. Worry wave is, oh my goodness, BP is being sued because of the oil spill. Well, BP can handle the lawsuit, so I'm not going to worry about them being sued for $5 million. Now, if they're getting sued and they lose a $5 billion lawsuit, that's something completely different. So worrying based off of temporal things is what I call the worry wave. Now, mind you, I will throw this side note out there. These are my own concepts. You're not going to find these in a book anywhere. This is just what I call how the herd flows, and they flow on the worry wave. So when the worry wave comes, they sell. The whole herd will start selling their stocks, and guess what happens? The stock price drops. Guess what I'm going to do? If it's a good company and the financials are good, I'm going to buy. Thank you, herd. You just put a stock that I've been waiting for, you just put it on sale just for me. Imagine, how would we put this? Let's say I'm going to do this for, imagine there's a purse that, as a female or whichever, that you really, 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 really want, but it's expensive. It's beyond your budget. And because of something that has occurred, it dropped in price all of a sudden. It could be something based off of the store that's selling the purse. But temporarily, it dropped in price. Let's say the purse was $500 and it dropped down to $300. That's a sale. Let me have my purse. Same thing with stocks. When the worry wave happens, actually when any one of these waves happen, the price in stock may drop because of temporal things that are happening that are going to eventually fix themselves, or that's just for a short period of time. That stock price may drop for a short period of time, and I call that stocks going on sale, and that's when I buy. But I'm also going to make sure that the company I'm buying can handle the occurring things that are happening from a financial standpoint. If they were strong financially before the worry wave or any of the waves I have listed, they'll be able to manage, and they'll be able to weather the storm and go back to being the strong company as far as stock price they were before. When I say stock drop as far as price, $1 drop is huge as far as I'm concerned, because if you have hundreds of shares of a stock, $1 can be massive. So other things that we can have as far as types of wave, economic waves. When I say economic waves, I'm saying things such as a United States as a whole, as far as the stock market or an indices, where it's not just one company where it's dropping, it's everybody as a whole in a particular market, and therefore it's affecting this company. Once again, if the company is financially strong, they can weather economic waves, at least long enough to where you will know, okay, something is a rise time to get out before you start losing money. Political wave, we're about to have a voting season, and that can affect the stock price based off of someone's views. It doesn't mean that it's happened. It's just the mere fact that it could happen, or the possibility that this is the way a political person thinks and they won. Stock market can take a dip just because of that. Now, I know that makes it sound finicky, but when you know the different waves, you know how to react. You know, okay, this is what I expect there to be a dip. Therefore, I'm not going to buy this week. I'm going to wait for the dip because I know it's coming. That's how I think when it comes to waves. Political waves that we've had in the past, I think I mentioned this on some of the other videos, we've had where president might just send a tweet and all of a sudden you wake up in the morning and the stock market just plummeted. We've had that several times. The threat of tariffs coming, stock market drop. Now, that one I do take a little bit more caution on when it comes to political waves, because tariffs will affect prices. Think about it. If a person has to pay more just to get something here for you to buy, a few things are going to happen. Either that company is going to buy less of it, the price of that good is going to go up, and it could be a possibility that people buy less of it. If those things occur, the stock price is going to go down. They're not doing as well financially, possibly. So when it comes to political waves, it depends on who it is and what they're saying, that I will actually take that into play when buying or selling stocks. Global waves. And this is one we're going to talk about with the coronavirus. Global waves are when something happens that affects the entire world. Something happens that a company such as McDonald's, who is everywhere, a company such as Starbucks, which is almost everywhere, where the stock price drops because something happens in one country, therefore it affects the entire company or the entire globe because of one action that occurred. Typically, global waves are temporal. Typically, I can't think of a global wave that affected every stock or a major portion of the stock market and it didn't bounce back from it. I can't think of one. There probably are some out there. I just can't think of one. Last but not least, legal wave, and I've already kind of talked about this, and this is when a company has several lawsuits. Perfect example, Johnson & Johnson. They have so many lawsuits going on right now that I can't even count. I sold my Johnson & Johnson. I got tired of the headache of trying to keep up with what's going on with them from a legal standpoint. And in my mind, I believe there are plenty more that are to come. Are they financially able to withhold a few of them? Sure. But when you have back to back lawsuits against you, something is wrong. And I sold my Johnson & Johnson. Once again, I'm protecting my 24. I don't have time to listen out on CNN or whatever other news platform there is to try to figure out what's going on with Johnson & Johnson every other day regarding lawsuits. So for that reason, I sold my Johnson & Johnson. There are other companies that have been sued. Who owns Tylenol? There was a lawsuit a while back with Tylenol, but they lost the lawsuit. The lawsuit was maybe 10, 15 million. But because they were so financially stable, it didn't affect the company, the owners of them. And it better not have been Johnson & Johnson. I don't know who owns them. There are other companies that have been sued. Like I said, as long as it's not in the billions, fine. If it's a company that's very, very financially strong and stable and they lose a $20 million lawsuit, they more than likely have that in reserve. And that's just a drop in the bucket for them. So that doesn't move me as much as far as waves are concerned. So these are just a few that came up with to try to give some concepts to it. But let's take a look at an example. So I'm pretty sure you guys have heard about the coronavirus. It's a virus that originated in China. It originated in China. And basically, it's a respiratory type of virus that spreads through human contact. And since then, it's been spreading like wildfire over there. It's really sad. But as a part of that, limited import and exports are happening as far as getting and sending goods to China. People are no longer going over there as far as tourism is concerned. They are quarantining as much as they can this entire country because there are other connecting countries that they don't want it to spread to. For example, India is right next door. So to contain it, they're trying to keep people from coming in and limiting people from going out. Well, there's a ton of product that we get from China over here in the United States. Perfect example is Nike. Guess where the shops are where all these shoes are made? China. Guess what they are not getting from China? Shoes. Guess what's going to possibly happen unless there's some type of remedy that's put into place? Or they may just shift and have some warehouses built in some other places, and if they don't already have those. The cost of shoes, as far as tennis shoes sold by Nike, will go up because of supply and demand. That's basic economics. Well, what will happen to their stock? The possibility of the stock price dropping is very high. What you have to figure out, or what we have to figure out as investors, is this a temporal effect or a long-term effect? Is Nike financially stable to weather the storm and then get back on and ride the wave after the storm is over? Or is this too much for them to handle and I want to back out and rebalance my portfolio? That's how I think. That's how many people think when it comes to stock investments, growth stocks rather. And then, of course, with this, there's been a global effect as far as the coronavirus. That's not just Nike and Starbucks. I was listening this morning to the news, and the second fastest growing economy right now, or at least was China. The second fastest growing as far as Starbucks is concerned is over in China. Guess what that did to their stocks? It dropped fast. So these are things. Now, who would have thought that something like a virus that is, like I said, is very sad. It's a lot of people over there that have contracted this over there, and it's spreading to other places as well. But who would have thought how much of an effect that would have on companies here in the United States? Now, what will happen after this? Will they go back to using China as far as the different shops to be able to create products at a cheaper price? Or will it come back to the United States as far as having our own warehouses? I don't know. Either way, there's some shifts and changes that are happening. And being aware and knowing what's happening in the world is pretty important when it comes to growth stocks. Does that mean you have to watch every news channel? Absolutely not. I don't. most of the things that happen in a major way, such as this, you're going to see it on every social media platform. You're going to hear it on the radio. You're going to hear it on the news. You're going to hear it in the commercials. It's everywhere, enough to where it's going to say, hey, maybe I need to see what's really going on. That's what happened with me. I was like, okay, well, what is this coronavirus they keep talking about? And here's someone who's being affected that it has nothing to do with. Corona, the market, the actual company that produces Coronas, because of the name alone of being coronavirus, is affecting their sales slightly. Not in a major way, but slightly, because some people have tied the two together. Those are things that you have to think about. So let's take a look at 3 quick companies. So I mentioned Nike. On the left-hand side is a 5-day chart. On the right-hand side is about 3 months, I believe. No, that may be 6 months. Yeah, 6 months. So the 5-day chart, they were as high as $104 a share. And within 5 days, because of the scare and fear of how the coronavirus will affect Nike's ability to do business, the stock price dropped. Went as low as $99. So it lost about $5 in value. Might sound small, but when you own hundreds or even thousands of shares of it, that's a lot. But if you look at the right side, they have been steadily growing. They've had their dips and valleys. Their waves have been going up and down. But as a whole, over the past 6 months, the price of this stock has been growing. So when I look at what's happening over the past 5 days, and I look at what's happening over the past 6 months, is this a stock that I should abandon because of something that may be temporal? Or is this something that I should buy more of because I'm getting a better value of the stock right now because it's cheaper? That's what we're looking for. Growth stocks. Finding a way to get in cheap and sell when it's higher. In this case, my opinion as far as Nike is concerned, Nike has been around for a very, very long time. I don't see this being a end all be all for them. But the thing that I am going to keep an eye out for is if there continues to be a hold on import and export in any kind of way, as far as them bringing their goods and products back here to be sold or to other countries to be sold, what is their plan of action? So in this case, I would be monitoring Nike a lot more. I would look for any news feed. Typically, I'll go to my E-Trade account and they list out all the news I need for the particular company I need under their stock. So I would pay more attention to that over a period of time. I would be looking for Nike to let me know something. Hey, what are you going to do? How is this affecting you? If it is, what is your plan? As a company that trades on the public stock market, they want you to be informed because they don't want they don't want the herd to sell all their stocks. They want the stock price to continue to grow. It increases the value of the company. So it behooves them to communicate. If they're communicating and they're saying, hey, we have a plan, this is what we're going to do, X, Y, and Z, it makes me feel a lot more comfortable about them and where they're going. They have a direction. Not saying that it's an absolute going to work, but at least they're trying and they have a direction and they're communicating. If it's a company and they're not saying anything to me, I might get a little nervous and I might start rebalancing. Does that mean I'm going to sell everything? Nope. It might mean that I might go ahead and take some of my profit off of it. So that's Nike. Let's take a look at Starbucks. Mention Starbucks. Once again, they were really affected by the coronavirus. On the left side, we have a 5-day chart of the prices. This is the price, by the way, I don't know if I mentioned it. This is the price that it's been over the last 5 days. So the highest point was last Friday at roughly almost $94 a share. By Wednesday, today, it was down as low as about $86 a share. That's $8 dip in a matter of 5 days. That's a lot. That's huge. Now, Why was there a dip? That's the first question. Okay, well, we know the coronavirus is out there, but how is that affecting Starbucks? And why is it affecting it so much? If I look at the time frame, the last 3 months, this is a 3-month chart on the right hand side. I can still see where they've been progressing higher and higher. They've had their dips, their waves, as we call them. But when I look at the middle of January, that's the only month we've had for the year of 2020, they took a huge plummet from $94 down to $86, which was over the last 5 days. And we know that it's coming from the coronavirus. We know that a major part of their growth, as far as right now, is their push into other countries, specifically China. We know that has had a major effect. What we don't know is, will this major effect remain and how they'll bounce back from it? In this case, I don't have an answer. And since I don't have an answer that I feel comfortable with, I'm not going to buy more of Starbucks. I'm going to hold, is what I would do to try to see what's going on. And I would set a bar, a red line. I would say, okay, Mr. Starbucks, if you go any lower than this particular number, I'm going to have to let you go, because I'm operating from an area of unknown. I don't know what's happening, and you're not telling me anything. For me, that's what I need in order to feel comfortable with the wave that they're going through. I know the why. I know part of the why, I should say that. Part of the why is the coronavirus. Part of the why is the fact that a major part of their growth right now is the number of Starbucks stores that they're putting in China. And that is really affecting their financial numbers. The question is, how long is this going to last? So there's too many questions for me with Starbucks. Am I saying you shouldn't invest in them? I'm not saying that either. Simply because I do believe Starbucks give dividends. They may not be a lot, but they give dividends. And like I said, I would kind of monitor the market. If everyone else starts growing as far as getting back on their feet, the stock prices start going back up overall for the entire market, but Starbucks doesn't, that's a red flag. So that's something I will watch out for. And that's kind of how I process through the different waves when it happens. Last one here, Coca Cola, one of my favorites. This is definitely Warren Buffett's favorite, so just thought I'd throw that out there. It's kind of make Warren Buffett an adjective. So looking on the left side, we have the past 3 months. I put these in opposite. So the past 3 months on the left, and on the right, we have the past 5 days. Now, I've been watching Coca Cola like a hawk. Every day I check Coca Cola stock price, and it's up 20 cents today, 30 cents tomorrow, 15 cents the next day. So it was steadily climbing, which you can see at the chart on the left. Steadily growing over the past 3 months. Back at the beginning of December or middle of December, it went down to about a little lower than $52 a share. And just between December and the middle of January, it went all the way up to 58. Steady growth. That's a wave I don't mind riding. You can see it took its dips and its valleys, but it still continued to climb. That's a good wave. But on the right-hand side, you'll notice that on Tuesday, something happened. They went down from $57.60 all the way down to $57. And then by Wednesday morning, this morning, it went as low as $56.80. So it lost about $1. This morning, they have what they call the pre-market news. And it was already said this morning on the news that, okay, the market is going to start out, it's going to grow, but the market is starting out still in fear of the coronavirus. If it's affecting the entire market, which that's what we've been talking about, I expect Coca Cola to take a dip out of fear of what's happening. And because of that, I'm not shocked at them losing $1. In this case, I'm buying. more because I expect them to bounce back very easily and continue to grow. Now, what makes this different from Starbucks? Well, financial stability is one thing. The next thing is that Coca Cola is pretty much everywhere. They've introduced new product to the market. They have energy drinks. I also know that they have some things that research that they have done over the years that as soon as they're allowed to, from a legal standpoint, they will release things like CBD drinks and things like that. More products that they'll put out on the market. So in knowing those things, they're very good at communicating their plan and their path. By the way, Coca Cola just had a conference call today where they were going over their finances. And as an investor, you can sit in and listen on those calls. You don't even have to be an investor. You can sit in and listen. You can pull them up on YouTube and get that information if you have the time. I normally don't sit in on all those calls because, once again, I'm limited with my 24. But if I'm riding in the car, I might play it while driving. If I'm sitting in traffic, I might play it then or something like that. But that is available. So I want to let you know about that. All right. I tried to keep this short, but as I mentioned, once I get to talking about stocks and investing, I get a little happy. So this week, we talked about riding the wave and getting the emotional part, getting more into the emotional part and thinking through and processing through how to view stocks, especially when they're dropping. What happens with the herd is when the market drops the way it did this week, it started last week, but when it starts doing that, people start selling immediately. Me, I go buy immediately, depending on the strength of the company. So just wanted to give you that tidbit. As usual, if you have any questions, please feel free to send an email to info@streamlineig.com. Have a great one.